there's a lot of David Tepper in this when he came out with that famous 2010, post QE1, and he goes on CNBC, and I did not respect this at the time.
The funny thing is that all the private equity, private credit names, they're down like 15% in a week on no news. No news at all.
He said he's going to get rates to zero, and me and Jared are pounding the table like, don't fight this trade, man. If he's going to make it happen, he's going to make it happen. Where are you on all this stuff, JD?
Man, that was a hose right there.
Give us a movie, Rick.
A movie that I keep coming back to at least like once every 2 years. It's Rounders.
My favorite is, in the poker game of life, women are the rake.
What is happening, good people? It is October 1st, and we are here to record Macro Dirt Podcast number 66. We've got my man JD here and a special guest with us, one of my favorite writer, trader, and analysts on FinTwit. My man Paulo Macro is with us today. What's up, gentlemen?
What's going on, Tony G?
How's
Good
everybody?
to be with you guys.
Everybody's hanging in there. We got some wounded warriors with us today, both JD and Paulo under the weather, but we're going to plow through because that's how you get shit done. Right?
Yep.
Let's start with this. Mario Lemieux, okay? Scotty Bowman was said to have scouted him when he was 9 years old, right? He's the 6'4", 235-pound Canadian beast that won 2 Stanley Cups with the Penguins as a player in 91 and 92, then came back and won 3 as an owner in 09, 16, and 17. He's a 3-time Hart Trophy winner, which is the league MVP, but his whole career was plagued with illness and injury. Little known fact, Mario used to smoke a pack of butts a day when he was in his teens and early 20s. Yeah, totally crazy. But this leads to the interesting part of the story. He winds up being diagnosed with Hodgkin's lymphoma in the 1993 season and only misses 12 games while he's being treated, right? He returns in the 92-93 season and puts up 160 points in only 60 games. He averaged 2.7 points per game that year, one of the best NHL seasons ever. The cancer treatments really, really hurt his back issues, and he really wasn't to come back. But he was immediately voted into the Hall of Fame after retiring in 97 and then came back to play after beating cancer in 2000. So that's why we got to give Mario a little airtime. What an unbelievable set of accomplishments, eh?
Wow. Yeah.
Damn, what a legend.
Right, like battling adversity from start to finish. Paulo, I'm so pumped that we have you here. We're going to get to know you a little bit. I would love for you to give our listeners, sketch the arc of your career in a minute or two for us, just to let people know where you've been and where you come from and where you're going.
Sure. We'll keep that side brief. Just we'll start off by saying love both of your guys' work. You guys are tremendous. Always finger on the pulse. I love especially mixing it up with people who have a love and, like real love for the game, but do things a little differently from how I might do it because, we're all blind men touching the elephant, trying to figure out what the hell it is, right? And getting to the answer of the P&L. So thanks for having me on here, guys. Real fan.
Oh, man. Well, go ahead.
For me, started in the business in the early 2000s. So, went to Wall Street thinking that was where the money was. And of course, the tide was going out just in time and learned the lessons early and hard. Have worked, kind of the nearly 25 years now in a variety of sell side and buy side roles as both an analyst and a salesman and broker. Been around deals a lot in kind of ECM type adjacent roles. And a few years ago, now that I have 4 young kids, so I'm kind of drowning in the love at home, but also a bit of the drama and pulls on my time since COVID. Realized I had missed a lot. Basically missed the first 7 or 8 years of my oldest life working on floors and you know how it is early to rise, late at home. Yeah. So decided to kind of take a bridge over the last couple of years to focus on trading my own money, honing my craft. I've always enjoyed to write. I think JD and you would both agree that, if you think clearly, you write clearly, and you speak clearly, suddenly you're trading better and you're speculating better and you're keeping yourself honest. And the whole thing is a flywheel. You screw with any one of those things, things start to fall apart. So I enjoy the writing. And as I got on Twitter a little more actively in the post-COVID, and it sort of took on a life of its own, Never imagined I'd have the follower base that I do. To be honest, I still think most of you guys are crazy for even reading that stuff. But uh, moving over to Substack really has a desire to write more long form, sort of how you guys do as well, and get the bug out that way. And it's been great to see people come along and the insightful comments and responses they have, the pushbacks, the sounding board that it is. And it's amazing. We live in an age where we can do all of that anonymously. So it's been an interesting ride, but having been on both sides of the phone call in the business over better more than 2 decades, put a few scars on in the meantime, as we all have, and still kind of love of the game and trying to solve the puzzle that'll never be solved, and that's sort of where I'm at now.
Well, you sure come at the markets with tremendous humility. And I love the point that you make about, we write so we know what we think, all three of us, I think. And the point that you said about how it translates into your thinking, speaking, and then all of a sudden your trading gets better. And all I could say is that my trading has never gotten progressively better since I stopped working for investment banks and started focusing on my own method of analyzing the markets, where I'm at the point where I kind of feel like I live in the zone. I won't say I'm right all the time, but I know I'm in the zone and I know where things are and what's rich and what's cheap and things like that. So I think that all comes from writing. And people should diary. If you're trading the markets, you should keep a diary because it's along the same lines. You know what you think if you write things down. What do you think about that, JD?
Yeah, I mean, I've been doing the Daily Dirt Nat for 17 years, and I sometimes I think about ending it, because I'm coming up on 20 years, and that's a long time to be doing anything, and I'm focusing more on trading now. But I realize that even if I ended the newsletter, I would still have to write in order to trade, so maybe on a much smaller scale or a little free distribution or something like that. But I would still have to write. So,
yeah. Well, one of the best things I did was cut down the frequency that I was reporting to people. And I went to 3 days a week. Nobody missed a thing. And I'm doing better from that kind of time frame, reporting on that kind of time frame. But Paulo, I want to get back to you. I want to talk about one thing. You were a music major in college. What was that all about? What was it like?
A little bit kind of right brain, cross brain, but that actually comes from my parents and my mom specifically. She grew up actually as a classical pianist and a professional classical singer.
Oh, wow.
So she, in having kids, she always insisted that my sisters and I had to pick an instrument at a very early age. My older sister picked violin, so of course, when they tried to put me on piano, I threw a fit and said I wanted to do violin. And then my younger sister picked the same. So we had 3 violinists at home. Wow. And it kind of grew out from there. Of course, you go through several years as a kid where you don't want to practice. It becomes a real chore. But at some point, like the bug takes and you realize that you've put in, the thousands of hours and you're starting to get good at this. So I started in kind of my teenage years playing at a pretty high level. Touring, even, with orchestras and stuff like that. So my life was going another way. But you're sort of forced to make a decision by kind of 17, 18 that if you're going to do that for the rest of your life, you either pivot to a Juilliard kind of Curtis type situation. You have to make that decision at a time when, I wasn't prepared to make that decision. So I sort of kind of split delayed the decision by, choosing to go to a college that was, liberal arts kind of classic, BA, but had a very well-known graduate school of music. The idea being, if I decide in college that, I am going to take the plunge, at 20, 21, 22, and this is it, I can major in music and then continue a career on with a master's in the same college and then go on from there without having had to commit to Juilliard at 18 sort of thing. And by the time I got to junior year in college, I realized, what, a lot of people making money on Wall Street and I kind of want to spread my wings. I've always, math and music have always gone together for me. And there was, a lot of ways to kind of get the math bug out in finance back then. And, the markets were running hot. This was, late 90s. So I decided, what, I'm going to I'm going to delay the music decision even more. But by then I had committed to the major. So I ended up graduating, like floundering around looking for a second major, took a ton of history classes, fell in love with history. It was always my worst subject. Now it's like all I can write about is what the hell has happened over the centuries. And like this feels oddly familiar in the markets. You kind of have to know a little bit of history or be a fan of it to, to be involved in what we do, but be good at math. So it all kind of came together for me to end up going to the street. Little did I know that, like we said, the tide was going out, and, trying to find a job in the weeks after 9/11 was a challenging time to, get started full time in the business. But that kind of dates me a little bit, I guess. But that's sort of how it happened. I still really value the background though, and I insist that my kids all play. I have 2 daughters on violin and 2 sons on piano, because it's so important, like for the mind at an early age. It is like learning a universal language like math. But it helps you grow. As you guys know, as music fans, it's so much easier to learn when you're young. The brain is plastic. Like the learning curve when you're doing this it's like learning how to ski or something in sports. Like you get better so much faster than you would if you started learning in your 20s.
Yeah.
And there's an element of pattern recognition, of language, of communication that is so important for any type of skill set, never mind what we do in the market. That has helped kind of form a base for my ability to navigate what I do for a living. It's hard to kind of bring it all home, but that's sort of how I think about it. I think musical education is fundamental and doesn't get anywhere near enough airtime. And people grow to appreciate when they're older.
Yeah. My favorite analog thing to do is play my guitar and cook. So I know exactly what you're talking about, man. And there is definitely a connection. I always call the markets are symphonic at a certain level. And the interplay is there. What a great discipline for your children to start at a young age. That's good parenting. You should be proud of that. That's really outstanding.
Yeah, the discipline also, that I forgot to mention, that like, practicing whether or not you want to. It's sort of like getting your butt to the floor on time at 6:30 in the morning. Like, you may be hungover, but you play up, you show up. Like, there's something to be said for doing the same thing every day, at least a while. You know what I mean?
Yeah, it gives you purpose, right? It gives you
Absolutely.
purpose. It gives you drive. It gives you something to compete with yourself for. And I think that's one of the great driving things in life. And so I want to get our hands on the markets, Paulo, because I want to hear what you have to say about a lot of things. I want to start by asking you, the Trump administration is a very, market dynamic sort of changing admin, and at a number of different levels. And I wonder what your thoughts are since Trump's been in office. Without getting political, we really want to just keep it on markets. Like, what are the big things that are going on and changes that are taking place during this administration that you've got to pay attention to the markets on?
Sure. Starting kind of very 30,000 foot, we're living in this, I call it the upside down, like Stranger Things, where like everything's kind of floating gray in the air, but it's the same world we used to live in, and all of it feels vaguely familiar, but a huge departure. To survive in this, I think, and prosper, you kind of have to get the jokes early. And some of the jokes include being able to hold 2 opposing views in your head at the same time and not go crazy. So I can be sympathetic to the fact that, the U.S. has put itself in a position over the last 40 years through relentless outsourcing and recycling of dollars here, and everything that, you guys talk about when you discuss gold, for instance, as sort of the opt-out and the expression of the debasement that's underway as the state sort of crowds in with ever more fiscal and support. At the same time, in mitigating or trying to reshore critical industries and what have you, which I think are necessary. I'm sympathetic to what's trying to happen here. Mm-hmm. At the same time, the libertarian in all of us, I think everybody who operates in the market for long enough has a little bit of that streak of like, let it be. Tells me, I don't want to live in state directed capitalism, right? Like, this is feeling a lot like China. Like, we're doing to ourselves what they kind of did to themselves to make themselves competitive, right? The labor and environmental arbitrage around rare earths, for example, and now they refine 90% of it because you can't compete against Western China in the West unless you double the price of rare earths and incentivize capital markets to underwrite it over here. So you got to take both sides of that coin, where the government needs to support certain industries to make us less vulnerable, but the presence of government support is sort of anathema to how we've viewed capitalism and formation of capital and growth in the past. You got to make peace with it, as you guys like to say. Also, it's not political. There is a kernel of truth to so much that happens with this administration, but there's also such a big cartoon around all of it that I think it's almost designed to leave us all crazy. And you just got to make peace with the tension and go with the trade and let it be. And what
What's
are the
trade?
trades?
What's the trade?
The opportunities are seemingly endless.
Yeah, it's true.
It's as I say, like Alice in Wonderland, 6 impossible things before breakfast. There's a lot of David Tepper in this when he came out with that famous 2010, post QE1. And he goes on CNBC, and I did not respect this at the time. I thought he was crazy. Like we were going into Great Depression too. The economy's getting squishy. We just had the flash crash in May. This is in 2010, right? End of the summer. And Bernanke just given that speech on QE2, and he comes on and he's like, look, it's really simple. Okay. They told you that if the economy goes down, they're going to print money and stocks go up. And if the economy goes up, stocks go up. So it's a win-win. And I couldn't stand hearing that. Most people I knew couldn't stand hearing that. And you know what? He was right for over a decade. Like it took a long time to get that joke. Like you don't fight the Fed, and they want this, right? Like this is the way they're going to reinflate out of that deflation in 2008. Like
Still
they're going to let
on.
it. Yeah. And still going on. Only now it's changing, right? Because now we all agree you don't fight the fiscal and you don't fight Trump is kind of becoming a thing. So you've got the Fed, the fiscal, and Trump, and the Fed's not on side right now. Hence, like why we're reading all about like Trump co-opting the Fed and getting them on side. But the point is, like, if you've got these 3 sort of pillars now, Fed, fiscal, and Trump, and whatever he wants, he's going to push and get by, hook or crook, he's going for it. They're going to try. Then you just got to respect that this guy has a hose, and anywhere like that crowd control hose that'll knock you off your feet, and anywhere he points that thing, like you don't want to be short that and stand there and say let it hit me in the chest, like you go with it. So just find out where they want to point the hose, and coming from a commodity background, this is Christmas for a guy like me because they gave you the list. It's sort of like Tepper. Like they told you what they want to do. They've given you the list. Like they've told you where they're going to point the hose.
Yeah, we've been all over the fact that he said he's going to get rates to 0, and me and Jared are pounding the table like, don't fight this trade, man. If he's going to make it happen, he's going to make it happen. So if you want to fade it, you're just going to be out of the money, and it doesn't make sense to do stuff like that.
So, rare earths, I know have run a lot, but there's stuff to do. The problem is that this stuff over 10 plus years of bear market in commodities and mining and oil and gas, especially has oil and gas is in a little bit of a different situation. I think that's more of next year where things could really start to happen. But in metals and mining, man, it's like less than 1% of global market cap now. Imagine the elephants through a keyhole that it would be just to like take a little bit off the top in an NVIDIA and try to cram into that space. Like there's no room. Yeah. So for guys like me, like individual guys who can get to upstream from the herd first and quickly before that money like gets sprayed onto the field, like they're going to soak the field. And like I said, they gave you the list. It's, everything. I was even shocked to see a lot of the kind of quote more Biden left type of commodities like battery, EV, lithium stuff. Man, they're getting it too. This Lithium Americas thing last week, they talk about renegotiating a loan at Thacker Pass and taking an equity stake in the company. And it's like you're giving away 5 to 10%. It's like you saw what happened with Intel. People don't care if they're getting diluted. They just want to be close to the money. When it comes to debasement, you want to be as close as possible to where the money comes out of the hose. Right? It's the guys really downstream from when the money hits that benefit the least. So stop doing your math, stop running your share count dilution, just get as close to the money as possible and don't fight it. Like I'm a very different guy from 2010 listening to Tepper. Like now it's just like they told you what they want to do. Just go with it.
I agree. Where are you on all this stuff, JD?
Man, that was a hose right there.
Yeah.
I'm sorry, man.
No, I like what you said about shave a little bit of market cap off of NVIDIA and stuff it into miners and see what happens. Like, I think, I think we're seeing that as we speak, So I don't really have, I'm heavily involved in miners. I'm not involved in rare earths at the moment. But yeah, there's still plenty of upside.
I think uranium is the big one here, guys. They already told you.
You
Yeah.
pull the words out of my mouth. Give us an update on that market right now, Paulo, as that thing is up 80% year to date, screeching along right behind gold miners, man. This is a relevant trade. What's going on?
Yeah, so it's niche, right? This is a space that's been coiling with a deficit for several years now, and the fundamentalists can latch onto it because they see balances as tight as they are. It's a very long fuse type of market where
Mm.
5 years from now is tomorrow for a nuclear utility. They have to place orders and contract now for 28, 29, 30 if they're uncovered. So a fundamental guy can run his models on supply demand and see that there is a problem that's brewed here and that's getting worse the longer people wait to take price up and re-rack the price deck to make new production and brownfield expansion economic.
Mm-hmm.
The issue that's more acute for me that got me really hard back into the trade in the last sort of 6 months is this idea that you step up like we did in 21, 22. People woke up, right? Sprott took over the Uranium Participation Corp and turned it into this trust that just eats pounds and they never come back out. And then it got quiet for a while. And then in 23, you had another big run. I like watching commodities that wake up in stages because it shows you that the deck is re-racking higher and then people digest the move on a longer time frame and it takes time. I'm not a day trader and in and out like day to day and week to week, but I like to be in the direction of a primary trend. What was fascinating was watching how utilities and kind of the physical commercial side of this equation ducked out of the room in late 23, early 24 when the price got really going. We went through 100, a lot of yellow eyes on Twitter. I sold a lot, took a lot of heat actually for it in late 23. Very well loved. One guy talking about how he had mortgaged his house to buy uranium equities and all sorts of stuff, right? Like danger signs.
Yeah.
And then you had a correction from $107 a pound to the 60s.
Yeah.
And you wrung out even a lot of OGs who've been in this trade for years because, it's hard to stay with something that draws down like that in your face. And it sort of went invisible, right? I talk a lot about going where something's gone quieter and visible for a while, but where the longer term primary trend is still higher.
Mm-hmm.
And this one felt a little simpler to me because we know that guys have to re-engage in this market on the commercial side. We know they have to catch up. And the space, and then we got the administration kind of hinting at you in April, telling you in May with the executive orders that nuclear is, X marks the spot. We've known for years that if there's a Venn diagram of Democrats and Republicans and anywhere where they intersect in energy, it's like nuclear in the middle, right? And so like this is just not one that anybody's going to fight. And now more recently, they've come out and told you that they want to do a strategic uranium reserve. And the only argument against all of this is how much stuff is really lying around. But I love that kind of setup because at some point, if people realize, crap, maybe there's less around than we thought, or we're hitting that kind of endpoint, we know what happens next. The stuff just auctions up and goes bananas until you call that material to the market. I kind of tend to think that we're right there in the next sort of 6 to 12 months. And this space is going to continue to grab attention. It's going to grab broader attention. They're going to blare about it. The administration's on side and the fundamentals are in your favor. And now the charts look great. And amazingly, there's an intransigence by guys who are not in the trade who should be. And that I kind of consider almost like the wall of proverbial worry. Like, there is room for people to add in this space. And if anything, there's a lack of really investable options. A lot of the equities, like you mentioned, have already run so much this year. They're discounting prices above the spot price today, $90, $100 a pound. We're still around 80. So I just see that there's a lot more room for something like this to run, especially when the government has your back.
Yeah, there's more room for a lot of, mutual fund ownership too. If you ask me, if you look at the top holders of Cameco and it's all the indexers and the Capital Group and then Murray Asset, Canadian Imperial Bank of Commerce, Royal Bank of Canada, Bernstein, that you can get a lot of smaller name funds that take much larger stakes in a lot of these companies. So I couldn't agree more that there are people that should be and will be in this trade. What do you think, JD?
Well, I don't know if Paulo knows this, but I was the guy that came up with the uranium assholes comment.
I remember.
Yeah.
And it was good, perfectly timed.
It
That
was
was
perfectly timed.
it was perfectly timed, but it's funny. Like, I'm one of the people who you said that is out of the trade that should be in it. You know, I mean, this is, Paulo, I don't know if you know this, but I'm kind of like the sentiment expert, and I'm really good at picking when sentiment gets really hot and really cold. What I should have done after that drawdown was just shove all in, but I didn't. So I'm on the outs.
That's all right. There'll always be an opportunity. There'll always be an
Yep.
opportunity in this sector, which is cool.
There will, and actually, full credit there, Jared. I remember the comments, and you've got a good nose and a good finger on the pulse when things get too hot for comfort. I would say that it's not without risk, and you probably get other shots on goal here as we move forward. If for no other reason than there's this weird again, like two opposing thoughts. We need higher prices to incentivize new production and development. But on the other hand, the stuff that's getting all the attention is this crazy crap that will probably never realistically come to market. The SMR, Oklo at $20 billion is half the size of Cameco, and Cameco is a real business that actually mines uranium, while Oklo is talking about maybe having a product in 2040. So it's these corners of the space that are actually getting all the attention, and the money is missing the places that actually need it, which are the guys who pull this stuff out of the ground and process it. This is also AI adjacent. So if there's any kind of shaking of the tree in the whole NVIDIA AI complex as things get too hot there, this sort of space could get caught in the crossfire, because there is some overlap between guys who own nuclear as the sort of power gen link into AI, right? Yeah. Like if you're in industrials as an AI adjacent play because you want to be long transformers and cooling systems and maybe a little nuclear around the edges because that's what's going to power all this stuff, in addition to now coal and nat gas. Yeah, you could end up seeing a flush in the space as sentiment gets a gut check, and you get an opportunity to look at this. I would tend to think that you're going to see more of a hit to the Oklo SMR stuff if the air were to ever, and operative word being were, to ever come out of the balloon. But there's definitely room, given the ETFs own all of this stuff as a basket, to keep an eye on the space if you feel like you missed it. And get involved knowing that the bigger picture is higher for the guys who are more upstream in all of this and the physical.
And Oklo is one of the biggest holdings of the URA ETF as well. Somebody else had flagged that company to me, that it could be a potential risk of just not being able to produce in time in this market that's very keyed on that. So that's something to keep an eye on for sure.
It's ground zero meme for commodity guys is Oklo and these names. And it'll hurt these ETFs if the retail tide goes out. I mean, they've got 2x levered Oklo ETFs now, man. It's crazy.
I mean, the size of the paper derivatives market that is getting built on top of the existing financial engineering is just fucking frightening, right?
Yeah.
I mean, that's what the gold trade is expressing, right? We've got this burst of kinetic energy to the upside now, where because it was bottled up between 3,200 and 3,500, or 33,000 and 3,400 for so long, all that energy is still coming out into the market, and it's just a vertical auction. And, it won't stop until it does, and we won't know the highs in, but it feels like gold is going to head towards 5K before that happens. What would you have? I want to ask you before we go back into that, while we were on this topic though, Paulo, I'm sure you read Cuppy's piece on the AI market and how the build out is probably so expensive that they could have a problem, paying for it with revenue. Where are you on that trade or that idea?
I'm really sympathetic to the write-up. I mean, the math is the math, and ultimately,
great, yeah.
It's hard to argue with. Admittedly, I tend to be skeptical, and I was forged in the crucible of the .com bear market, so it hit close to home.
Yeah, exactly, totally, man, it did. But
I don't have much to add to it, to be honest, because you run the numbers and you realize unless you assume just a dramatic return in revenue growth, and it really does feel like a plate spin. And for me, it wouldn't bother me so much like that people want to pie in the sky the revenue growth and the opportunity of what this could be, like the internet, what it could be, but that we have the the very clear sort of, I hate, to be crude, but like circle jerk of like the money just goes around and around among the same players. And I just, I don't know who's going to fund this thing. But then I get a little nervous because what's happening now that makes me worried, like maybe it's not 99 or '07 but it could be '04, is that the financial resources to support all this on the credit side are just becoming mobilized now. So we were talking a week or two ago about this, and then I looked into it with some friends, and it's happening in the last 6 months. We know private credit has just grown to the sky, and filled the room that bank lending has not over the last few years.
Mm.
And it's interesting now that private credit, as expressed in business development corps, companies that you see that trade, in the screen, because there's some publics that are out there, are collapsing. And it shows you that, it's always the publics that go first. It's sort of like Kathy before Chase Coleman and Massa in 21, 22. It goes public, then crossover, then private in order. But publics are the most sensitive, and they see the problem first. And you look at Blue Owl stock and Blackstone BDC and this other stuff. They're making lows, man. Like this stuff is, these charts do not look healthy. They're telling you that the listed versions of private credit are starting to smell a problem. And this is all very recent. But
Yeah, this all happened in the last week. Like,
yeah,
the funny thing is that all the private equity, private credit names, they're down like 15% in a week on no news.
yeah, and then
No
it always
news
makes
at
you
all.
nervous, right? But like
And
there is news, except Jared, like it's kind of far afield. Like Tricolor happened, and everybody was like, "Huh, that's weird." Like a subprime auto lender to immigrants, like who might be illegal. Okay, I guess so. But then like a week later, First Brands files for bankruptcy in the auto parts space, and like suddenly you're like, is somebody pulling lines to the entire auto sector right now? Like, what the hell is going on behind the curtain, right? Because there's never one cockroach when this stuff starts to go. But now you see like listed versions of private credit start to go, and I wonder, like given the complacency overall in the market, just the sort of general setup, like there's stuff to pay attention to here. It took a while and the markets kept going, and not to suggest that '08 is around the corner by any means, but like, the Bear Stearns funds blew up in June or May of '07, and we were still making new highs in October. So, head on a swivel. Where like that risks are starting to pop up out of the ground on the credit side. But then when you look at data centers and the massive investment that's happening here, and you see like the 60 football field, on one site kind of pictures that was like a dirt plot a year ago. And then you ask who's funding all this, right? Like, because billions isn't enough. Like this isn't Oracle paying cash. And you start hearing like actually private credit has done billions of this stuff in the IG segment of the asset class. And I'm like, well, what do you mean? It's like, no, Oracle puts in the equity. Blue Owl owns the sub, the Mez, and farms it out to their private credit funds. And now PIMCO and BlackRock's investment grade, $50 billion fund is chipping $1 billion into a double A backed ABS around the edges. And I'm like, so my mom or dad might own an investment grade credit fund or bond fund at a BlackRock, and that thing is starting to buy data center debt that's senior. But you better hope that like the revenue shows up here, because this smells like it's sort of like Biff Tannen in Back to the Future too. Like there's something vaguely familiar about this. You know what I mean? Like feels a little familiar to something that I went through. But it could be '04. And like maybe we have to do a few hundred billions of this nonsense before the money doesn't show up and people realize they're not getting their money back and everybody panics at once. Like that could be 2 or 3 years from now, right? Like or it always makes me uncomfortable when I see. It's one thing to fund all this with equity and IPOs like .com. Okay. But like when you start putting credit in the mix and funding this with guys who may not know what they're buying, and moms and dads in their 401ks having access to private credit, like what is this? Like there's a disintermediation of knowledge in what people are buying and what's really underneath all this stuff that could even be making this stuff systemic, man, because the numbers are that big, right? So look, it's not like we're going to crash tomorrow, but my antenna are up. Like there's a lot of sus stuff starting to happen around all this, and it feels like NVIDIA is like the black hole mass at the center of the galaxy. You know what I mean? Like,
well, it clearly is. We can think whatever we want about the overbuild or whatever. I think their GDP market cap of NVIDIA is on its way beyond the GDP of Germany. And I think it's probably got only China and the U.S. The thing's 187 bid at an all-time high as we speak. And my favorite meme that went around about, I think Northman Trader posted it, was the meme with like a bunch of kids sitting around in a circle and everybody's got a basket of lemons in front of them. And it says, let's invest in each other and buy lemons from each other. Right? I'll put that graphic up there. I thought that was hysterical. Yeah. JD, any thoughts on this?
Yeah, I mean, my antenna are up too. You know, I have short exposure to Blackstone. So, you know, I've been on the private equity, private credit short thesis for almost 2 years now. A little bit early, but yeah, I mean, the way you put it is pretty interesting.
Yeah, man, subprime vibes all over again. Really wild. Is there anything in the markets that we haven't touched on that we should, gentlemen? Anything that you wanted us
I
to
just
talk
think
about?
I think precious metals are getting into correction territory here. I mean, I have a core position which I'm going to continue to hold for a long time. But if you have a trading position, I think it's getting a little bit hot. So
it's definitely getting hot, man. You know, what's amazing to me is that as silver approaches $50, all the silver bugs are out now saying, oh, you know, it's going to 200 or 300. And when you hear that stuff, it's like, it was the same thing with Bitcoin at 120K when there were guys talking about $1 million price target. It all just rhymes to me. So I can't go in and chase all of these trades myself. I'm not in the silver trade. I'm in the gold trade. And I disagree vehemently with Jared that it is showing any signs of stopping yet, because it is doing everything that you want for a bull market breakout out of a, 8-month-long consolidation period. So we'll see how it turns out, but things are looking really, really interesting from here. I want to go off markets quickly before departing.
Let's talk about Aaron Boone.
What a boondoggle. Good grief.
So Aaron Boone left 57 home runs and 145 RBIs on the bench. Jazz Chisholm and Ben Rice. Austin Wells came up in the 8th, could have hit with Ben Rice. He didn't. Took Fried out after 6 innings. I don't know how many pitches he had.
102 pitches, a 4-hit shutout he was pitching.
Yeah. Took him out. They left Crochet in for 117 pitches, which is what you're supposed to do. And I mean, bases loaded, nobody out in the 9th is like, you know.
Apparently, so here I have so much to say about this. First of all, pulling Max Fried was insane, right? You literally were sitting here watching a pitcher's duel and you pull him at the apex of his performance. Like, pull the guy with men on base that he let on, right? Like that I'm okay with. You're going to pull a guy pitching a perfect game because the computer said so? You're crazy. And then the Yankees are second team in Major League Baseball postseason history to have the bases loaded, no outs, bottom of the 9th, not score a run, and lose. Apparently the Phillies did that once, and I think it was 2008 as well. But, I mean, it was staggering to see 3 base hits in the bottom of 9 and then 3 straight outs. That is a loss that you don't recover from.
Yeah,
mark my words. That's what I think about that. Paulo, any view on the Yankees?
Man, between these 4 kids running me ragged and the markets, I have so much less bandwidth for sports than I used to. So I'm going to defer to you boys. You guys are in the weeds on it.
I know what you mean. I went through that period of child raising, and it is hard to stay in touch with sports, get to the stadiums again. But don't worry about it. Once they get into college and you're paying through the nose for that, you have plenty of time to keep up with the sports in your spare time.
That's right. I'll be back. You know, these are the lost years for sports for me, but I'll be making up for lost time before I know it.
That's for sure. Let's go to the movie column real quick, JD. You gave us Sicario last week. I watched it. I was glued to it. I thought it was totally awesome. Brolin, Benicio del Toro, and even the gal was fantastic. Emily Blunt. What a cool movie, man. I didn't realize it was nominated for 3 Academy Awards, being Best Cinematography, Best Original Score, Best Sound Editing, for whatever reason. But that movie kicked a lot of ass, man. That was really, really rad. And I'm going to watch the sequel. Did you watch the sequel?
I did watch the sequel. It's not as good. It is pretty good, but
Yeah.
it's not as good as the first one.
That's okay if it's not as good because Sicario is really a badass movie, man. I mean, I love Benicio del Toro's character.
Dude, I told you about that scene when they're driving into Juarez,
Yeah.
right?
Yeah,
Like,
that was gnarly.
yeah, that was gnarly.
That was gnarly. But my favorite scene was when Brolin I guess he was a guy that was working for the cartel that just came on to Emily Blunt, right?
Yes.
And was trying to pick her up, and they picked him up and threw him in the back of the car. And Brolin goes, "The best part about you being beat up already is that nobody's going to notice a few more scratches." When they were trying to
And then
get the
Benicio
info
del
out of
Toro sticking his finger in his ear.
Yeah, man. Like you were like, oh, that was so gnarly, but it was so good, man. Really, really great recommendation. Great recommendation. Yep. Did you see that movie, Paulo?
Yeah, I like it.
Really cool. Give us a movie rec.
Man, I've got nothing kind of far afield for you. For me, like a movie that I keep coming back to at least like once every 2 years. It's like rereading stock, reminiscences of a stock operator every few years for me. You just have to do it.
Yeah.
And this is going to sound hokey for a guy who operates in the market, but it's Rounders. Every time I must have seen it 10 times, and every time I watch that movie, and we all know the lines, and John Malkovich is amazing, but every time I watch that movie, I find some little detail in it that's tucked in there that I missed. And there's just
my favorite is in the poker game of life, women are the rake.
What the hell is that? I don't know. Someone should say it. But now there's, the last time I saw it, there was this great little moment when Matt Damon gets, cleaned out at Teddy KGB's, like right in the first 20 minutes, right? So I'll give you two lines. One, like in the opening credits, right? He's narrating, like, if you don't know who the sucker is, you're the sucker. You got to keep listening through that narration, because as he's pulling the money out of the books on the shelf and getting ready to go and get cleaned out, he drops this line that, like, you got to play it tight, like, get your money in when you have the best of it and protect it when you don't. Don't give anything away. And like that one little line is so what we do in the market. Like, don't give anything away. When you start being callous with stop loss, or you let something run a little longer, like, and you're not playing tight every day as a trader, you're doing it wrong, and you're asking to be what happens to him and taking a bad beat, right? But we all take bad beats. The market loves to just shove an umbrella down our throat, even in our 40s and 50s, and then open it up, like just to give you that gut, like, my God. But there's this moment I noticed right after he gets cleaned out, and he's in shock, staring at the table, right, that he lost everything. And Kanish comes over, and I didn't notice it because the audio is kind of soft, but like I had the subtitles on, and he just puts a hand on him and he says, "Get up." And I realized, like, as much as you want to be a black box quant sitting in a room, Mike Burry style, listening to your music and doing it by yourself, everybody needs that guy who knows that you took a bad beat and tells you to get up. And it's this wonderful little moment where, yes, he warned you, let's go find something soft over in Queens. But he's like, now's not the time where he says, like, I told you so. He just says, get up. And this market will, like I said, like, shove an umbrella down your throat and open it. And every once in a while. And if you have the handful of people in your life, whether it's your wife and your family, or better yet, not better yet, but for what we do, because my wife works in the arts world. She's not a part of our game. Someone who knows this game that you can trust when you're talking through your book or positions, or what you're kind of sweating or what have you, or when you've taken a lump. Everybody needs that condition in their life. Like, people remember, like, when he says no to the loan at the end, but they miss this part where he says, get up.
Yeah. What it reminds me of is trading the gold book at Goldman Sachs with, the manager of the desk, overseeing my trading, et cetera. And there were some days as a dealer that somebody will pick your pocket on the lows and you get caught short, and then somebody will smash you on the highs and you get caught long again, and you'd be in between trying to make up the money, and you'd just be making the hole deeper. And our manager, to his credit, when he noticed that, he would come over and put his hand on your shoulder and just say, just stop trading. Stop trading. Just stop trading. Right.
That's
And it was
commish
great
right there, man.
advice, right? It was like, just, okay, let's stay flat. Stop trying to pick up nickels in front of the steamroller. Or, just stop what you're doing. Really, really important concept.
Yeah.
Put yourself in a timeout. It ever happened to you, JD?
Oh yeah, yeah. I mean, it's funny. Paulo was talking about getting sloppy and playing loose and losing. Dude, I had a terrible trade a couple of months ago. The worst trades are the small positions that turn into large losses. Right, the small positions you're not really paying attention to. You're like, you lose a little bit. You're like, it's not a big deal. You lose a little more. You're like, it's not a big deal. And next thing you know, you're sitting on a giant loss.
Garbage trading. Nothing. No
Yep.
casual positions in the book, man.
No.
You put it on to pray with an E, and you take it off, and you be flat in between. Trading is transactional. Trades are not forever. And yeah, protecting your profits is that is what we do, Paulo. What a great pull from Rounders. Really well done. I think that's a good enough note to end on, man. We covered a lot in the markets. We covered the baseball, movies. We covered a lot of really good gambling and trading stories there at the end. I want to thank everybody for tuning in. Thank you for liking and subscribing. Thank you for buying the Macro Dirt Dual Sub, because they're still flying off the shelves. And Paulo, thank you so much for joining us today. I can't wait to have you back on the show to get updated on the things we were going over today, man. That was awesome.
Thank you so much. This was such a treat, guys. I really appreciate
Absolutely
it.
fantastic. We'll let you know when it's out tomorrow. That's the end of Macro Dirt Podcast number 66. Peace, amigos.